Good morning, everyone. Ooh, there we go. Good morning, everyone. It is Tuesday, December 14th. This is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Today, we do have a little bit to talk about this morning. We are going to take a peek at what's going on with the euro. The currencies are moving a little bit. And then, certainly, the PPI numbers just came out. Inflation clearly much higher than what was even anticipated, and they were anticipating an increase. This came through in the PPI, and we're going to take a look what's going on in the metals. Immediate reaction in gold and silver. We mentioned this yesterday. We might see this type of a reaction, and we're seeing it. And we'll take a peek, and then we'll probably wrap it up taking a look at the NASDAQ. I want to remind everyone, in fact, I'm going to do this now, is in 3 hours, Brian's going to be doing a full-blown session. So after the open, we get an opportunity to see what's going on in the markets. I just dropped a link in. Register. Remember, on Tuesdays, we do the full-blown webinar midday to take a look at what's going on. All right, before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. I am going to, I wanted to show this first, if I could find it. There we go. We did have these PPI numbers come in. You can clearly see where they were before, what the forecast was. These are the producer numbers. I mean, everything is through the roof. If it's going to cost producers more to produce stuff, guess what? They're going to pass it through. And we are seeing that immediate reaction in, silver just got smashed all the way down to and we actually had a level down here where we knew the buyers would step in, and they're giving it a pause. We'll take a look at gold too. But before we get over to that, I'm going to flip it over to Brian. Brian, let's take a look at the euro. Then we'll come back to the metals and we'll wrap up with NASDAQ, and then have everyone come back in a few hours and we can do some deeper analysis.
Yeah, so far, obviously PPI, they've blown the numbers out, almost double in both. I think that was, it was supposed to be lower. We mentioned it yesterday. If that was higher, that it was going to definitely call for some severe language in tomorrow's FOMC notes. I think this is higher than most people expected it. But right now, the currency market has kind of absorbed it. And the reason why is because they already expected some type of raising. But we are kind of one day before, not really doomsday, but one day before doomsday when the statement comes out. So it's kind of one of those things that if there was not an FOMC meeting, this would be such big news and it would have skyrocketed things. But really, everybody's kind of holding in reserve for what's going to happen tomorrow. But this is obviously going to change things around. Todd, you said you saw a poll of what the changes are going to look like, but that was before they saw these PPI numbers.
Yeah.
And again, as you mentioned, this is the, guys, if you're like, what is PPI? The producer price index. And listen here, it's like the change in the price of finished goods and services sold by producers. So, again, it's the prices for what we're paying for things. It is kind of similar to the PCE. It is kind of more of the government's gauge on inflation. I don't know if this is it was a hidden update that CPI is changing for next year because there's been such changes, they're going to change the parameter of when it's being compared to. So it seems like PPI is going to be the better gauge going forward. Either way, this is a big number. It's going to definitely be talked about it tomorrow. And again, Jamie Dimon was pretty correct once again. Again, we'll hear it tomorrow with how correct he was, but that their hand was going to be forced, that they were going to have to make severe changes because it was just getting worse and getting worse and getting worse and getting worse. And again, that's where we're at right now. So,
and I just dropped into chat, by the way. Yeah, the expectations right now are that they'll end their purchases in March or by March and start to do the first interest rate raise in June. The question is are they going to be forced to even do it faster?
Yeah, and one of the things that I've brought up is, I don't think they'll. I don't think they'll do the immediate just cut up. That's it. We're not buying anything more right now. I think that would be too sharp. I think it would be a fast gradual. The question was, do we do a single raise or a double raise for the first one because it's getting out of control? And I mentioned this a few times, but I would not actually be surprised now if. And again, guys, there's all type of percentages on how much the raise will be. There's a 90% chance of this, and this is when it happens. It's like it's almost like Wall Street, right? Or not Wall Street, Vegas odds for what they're going to do for
Well,
this.
we do have event contracts where
Yeah. Well, I
you
don't know
make
that they'll.
predictions
Yeah,
like that.
but there will be people that are now talking about a double raise instead of a single raise the first time.
So do
And as soon as that becomes
a half a
mainstream,
point instead of a quarter. Yeah, that's an
yeah,
interesting possibility.
yeah, and the dollar will just take off. That will be a huge boom for the dollar. But as far as metals go, I mean, obviously, silver's a big one. And both of these levels in my afternoon session yesterday, and I don't. Sometimes, guys, I apologize. I confuse what we did with the morning Nadex session with my group behind it. But we had talked about gold and silver. I had two opportunities that we had seen this racetrack, this big pop up in price. And yesterday, I did mention it that I was expecting both of these two to drop with the interest rates. Reason why is gold and silver kind of a proxy, but gold is a hedge for inflation. Inflation's already here. Now we're in the crushing of inflation time frame, not the building of inflation. It's already in. It should have already done most of its movement. So now with them making changes to crush inflation, again, that's the exact opposite of hedging for it. So, you know, the goal is get in if you can. If you're not already in, it's kind of like it's a little bit late for those. But this was one that we're talking about a break. Again, it was the racetrack that was signifying this one, seeing the levels of basing, and it is blowing through. And as you can see, it's having a bit of a hiccup down here at the 2184. Again, we had this as depending on how it broke through, it was a potential long, but because we were already in a trade from up top, this would have been our first target on that one. And now we would need some type of a confirmation bounce to see where it goes with it. But in all reality, I mean, we're still 40 minutes before the market has really got an opportunity to react to all this. Question is now is do we continue to base through this level, right? Or do we kind of punch through it just a little bit lower before the open and pull up? And then will and again, metal traders are already in, but will the average retail trader now get in there and drive the price of silver all the way down to 2150? So there could be some opportunity in silver today. Gold looks very similar. Again, went all the way down yesterday. We drew a profit target right where, again, this was going to be a little bit harder of a zone to go through because there were so many buyers building up because the wicks get higher and higher and higher and higher. There was our profit target, right? Right where the first big candle was. It literally came down, tagged it, and popped back up again. And again, it was a break of that 1780. Same exact setup, racetrack setup, areas of buyers, and we knew we had already kind of put in some here, but we had hit it here, we'd hit it here, we'd hit it here. We had our 1, 2, and 3, and number 4 is what just sliced through it right away. And again, those shorter duration contracts are way to the playlist. We knew PPI. We mentioned it yesterday. PPI is a big number. If you go back to, right before at 8 o'clock, you can say, hey, listen, there is an 8 to 10 binary contract. You were sitting up here. We were expecting it to crush down. That's a lot of movement very, very fast inside of a short duration contract. So again, kind of the same theme that we've been talking about for the last couple of weeks is shorter duration contracts, the 8 to 10, particularly around news, look for basing, and again, base it off of what we're seeing or what the markets are believing. So again, big movement. Silver down 2.25%. In regards to that too, again, silver is kind of important right now. This morning, when I was dropping the kids off, Tom Sosnoff of Tasty, obviously part of IG now, he was actually on CNBC, and they asked him about, last year's meme trades, and he basically said they had their 15 minutes of fame. They are no longer worth trading, and that's why we're seeing all of them retreat down. And remember, silver was one of those
Part
meme
of that.
trades, right?
You bet.
Yeah, silver was the way to take down Wall Street. And I've been joking about it for a while, and my group's like, yep, you got it. It's not hitting 100. I'm like, yeah, it's down to $21. So, again, all the memes are getting crushed, and they mentioned how Bitcoin's at 47,000 and a lot of things. Wall Street is a powerful force. Trying to take down a powerful force that is not only traders but also regulators. He mentioned that the meme stocks are not even tradable right now because of the capital requirements based off of volatility. Those are things that a lot of amateur traders don't understand. And again, that leads us into the next piece here, the VIX. Right, I've been talking about the VIX a lot more because it's something that you guys, I definitely feel it
creeping up.
Yeah. I mean, I'm delayed by 10 minutes on the VIX right now. I don't pay for the futures data to get live VIX here, but the VIX typically it's a volatility index, and it's showing you what happens with the indices. Whenever VIX is big green, we typically have red or big red inside of the indices, and that's where they're all going right now. You can see that from where we were at this bottom area here, we talked about, again, not necessarily a tradable asset, but it's important to understand. Here is where the gap was. What did we just do? We bounced into that gap, and then we kind of are now pushing back away. Now we are approaching it on the top side, but I'll tell you right now, with FOMC tomorrow, it is probably going to stay at a heightened level right now until FOMC comes out. And it's nothing but, it's not going to be peaches and roses yet, tomorrow on that. Indices.
Yeah. And by the way, and the VIX, if the indices get a washout on the downside, volatility spikes. When the market starts going down, fear starts going up. They add they add premiums into the options. I mean, the VIX is a measure of the at the money options in the S&P 500. But market starts going down, you're going to see the VIX even go higher. The VIX tends to only go down when the markets are creeping up, and
Yeah,
so when there's
yeah,
uncertainty,
nobody's nervous about when the markets are going up. That's one of those things. That's where
yeah,
people are like, this is good. So right now NQ is down 1%. It's down the most right now, and it looks like it's going to continue to be the weak one. Reason why, again, Apple and Tesla are both on the downside. And again, those are great ways to look at it. You can see Apple so far this morning has really been pushing down. Tesla, kind of the same thing. If these two big boys are down, NQ is probably not going to have the best day. Question is, where does NQ stop today? I mean, if you're trying to get into it now, it's already moved down big. It's not necessarily, I mean, if you're looking to short something, you don't want to short it low, right? Um, right now, it looks like, I mean, yeah, we have the psychological numbers in here at 15,900, and that's kind of what it just bounced off of right now. But again, we're 30 minutes before the open. We got some more room. I would say, again, there's profit taking from all the news traders, is what we're seeing. There's a small level sitting right here. Let me throw some figures on this one as a potential area. We may actually already be down. Yeah, 15,850. You can see there's one level here. Excuse me. And it is tested, but it was tested at 10 p.m. at night. So not necessarily the greatest, but it would be at the first downside target. After that, there's a big run here. We may actually see prices come all the way down to 15,700. So, it's kind of one of those. We'll see where we are at the open. And again, it may be something to analyze a little bit later today, but there could be the potential of a short trade here. And it's a 1 to 4 all the way down to the next psychological level. You see 1 to 3 is sitting right there. And again, there's nothing besides that psychological level at 15,800. There's nothing. And let me drop it down to a 15. And there's a little tiny hiccup, but barely. So again, there could be a potential trade with a break a little bit lower in here. Of what is it? About 15,820. About 15,820. You're gonna say something?
and all of this, coming off of right now, it's moving off of the PPI. We still have to wait to hear what the Fed has to say tomorrow, and I don't know if this
Yeah.
changes their getting these PPI numbers is going to change their narrative of what they were planning to say. I mean, I'm sure they probably knew what these numbers were going to look like.
Yeah, they did. Yeah, they knew what the numbers already looked like ahead of time. The reality is, it's kind of what it's not even so much what they're going to say; it's what people's perception of what they're going to say is how it's going to dictate the market today. The question is, and this is what I would watch out for. I put it this way: tomorrow, there's a lot going on tomorrow with FOMC, more so than just what's happening in the market. Because remember, it's a very difficult situation now that we've gotten ourselves into. And this is why Jamie Dimon said, as we continue to push, it's going to cause more and more problems. We have 39-year high inflation right now. But, and again, approval ratings, they have to bring politics in, because at the end of the day, there is politics involved with this. At the end of the day, we're seeing approval ratings at the lows of the entire, in the entire term right now. People are extremely unhappy about inflation. But people are also not looking ahead saying, hey, listen, the way you curb inflation is to raise interest rates. That hurts the housing market. It's going to crash the stock market. And, every single senator right now is looking at this going, wow, what kind of mess did we get in? Because if all these things that we're demanding have to happen right now and we crash everything next year, we're done. It's going to be a complete reversal in a midterm election, because people are very unhappy with everybody that's in office when we're sitting in a recession or depression.
Although, generally speaking, we're unhappy with who's in office no matter what.
It doesn't matter. Yeah, we're happy all the time anyway.
If they're in office, I'm unhappy with them.
Yeah, but that's why tomorrow really matters a lot, because the question is it going to be one raise? Is it going to be two raise? There's people out there, all these people, all the Fed presidents that were like, yeah, we need to do this, right? We need to do this. And Powell was like, no, we don't need to do this. Ballard's over there going, I told you how all this was going to unfold. Well, Bernard, she hasn't made many comments, but, yeah, so the thing is, there are certain people to know that have been saying what needs to be done, and now everybody else is catching up. And again, there's going to be a lot of jockeying back and forth. So the question is, how aggressive do they want to take this tomorrow? What are we looking for today? And again, I would be very surprised if they were very kind of dovish about the whole, yeah, we'll raise, it's temporary, because they can't say any of these things anymore.
No.
We'd be looking for areas of stabilization, and what that would do for us. And where do we see it? We saw it over in gold, and again, it's in silver. No, where the heck was it? It was in the euro. I'm sorry, we were supposed to look at the euro first.
The pound euro. The pound euro.
This one, I done messed this one up. It was my bad. My bad.
Oh, the Euro.
This is kind of
Yeah. I forgot.
yeah, the Euro USD. And here's why it's important for the indices today, because here's the European Open. What did the Europeans do to the euro dollar? They literally shot this up and did nothing but put in dollar weakness this morning. And again, no US traders in there. And then it turned at their typical time is where it hit an old level of sellers, kind of where Friday's gap was, and started pushing it back down again. News popped it right back up to that level at 8:30. And now we're dealing with the racetrack for the rest of the day with huge PPI, which again could lead us to an amazing trade back to the downside. I would look for something similar tomorrow morning.
Yep.
So when you wake up, see what the Europeans did to the overall indices, because what they're doing is they're placing it in a better position. This is obviously extremely strong dollar, right? As this drove up, they said, "Okay, we're gonna get that. We're gonna get this as cheap as we can get it." Because again, remember, this is euro dollar is dollar in the second position, so they got the dollar. It was basically on sale. It was a fire sale on the dollar. News came in, it's already in a high position, starting to creep back down again. And that's how they manipulate the market in the overseas arena when there's no US traders. Tomorrow, we should see the same exact thing. Because I'll tell you right now, the statement's already been written. It's not like the Fed was waiting to see what the PPI numbers was. It's already written. There are people out there that have copies of it. They shouldn't, but they do. So look to see tomorrow where the movement is coming. Now, what can we do with it today? I would say overall, this is not really the best idea. I hate to say this because people are like, "Are you crazy?" There will be opportunities for longs today. The reason why is there will be profit taking coming in. Look for bounces off of it, but also little things like this, little levels like this right here. And again, we're on a 15-minute. Yeah, this is done at 7:15 in the morning, but look at this level. A great ratio between the body of the candle and the wick on the top. And what did it do at 8:15 right before the news came out? It pulled up to that level, expecting that PPI was going to be crappy. Bam. Boom. So that's a level that has now been tested. It's something that you need to mark off. And again, we may get more of those levels once the open happens today. Because again, the retail trader is going to get in here and be like, "Oh my God, what's happening with this PPI?" And again, they're seeing the gigantic spikes in gold, and gold is just not stopping it and ended up just blowing through that level. And silver, same thing, right? It is, we'll see if we get that 2150 today. So this is what happens. Nobody likes ripping the Band-Aid off, but it has to be done sometimes. And this is the first step in ripping that. Look, VIX is now up to, and again, I'm delayed 10 minutes, but it is now up to 7.2%. Look at the VIX skyrocketing up today. So again, this is why understanding other things besides what is a candlestick, what is MACD? Those things are not going to help you make money in the market, guys. Understanding the underlying factors, it's this kind of stuff. And at the same time, you're looking at AMC and GME down 13% and 14%.
So remember to come back in 3 hours. Going to be doing the full-blown session today. With that, any questions for Nadex, email us, customerservice@nadex.com. Brian is also accessible. Please feel free to email Brian at support@keeptradingsimple.com. Do have a bit going on in the markets this morning. Clearly, we spoke about the PPI numbers. I dropped that link in if you wanted to take a look. Inflation clearly here. We've got the FOMC meeting tomorrow. We're all waiting to hear what the Fed is going to say. But with inflation where it is, we're already seeing an immediate reaction in gold and silver to the downside. And we're going to have to wait and see what the Fed, what their policy is actually going to be, because really that's what everyone's waiting to see. Is we know that they're going to taper, we know that they're going to stop, we know they're going to raise interest rates. We just want to get a glimpse on timing. Brian and I will be back tomorrow morning, but in the meantime, please join in 3 hours. The link to register for the webinar is in there. We will catch you later, and until then, good luck in the markets, everyone.